It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, August the 8th, 2016. Cracking open this second full week of the month of August. Today was what we call Reaction Monday, which is the first full day of trading after Friday's very important, highly anticipated non-farm payroll report. And it's usually a sure bet for some explosive price action. Now, we got some great movement on crude oil today, but the S&P, gold, and euro were all a bit sluggish, which definitely tells us to expect some big opportunities in tomorrow's trading session. As of this minute, crude is bullish, S&P and euro are bearish, and gold is trading sideways as we go into Tuesday's trading session. I have another great newsletter in store for you guys and gals tonight with plenty of reliable trading opportunities setting up in tomorrow's session. But before we jump into our charts, before we put the plan together for tomorrow, I want to remind you, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video that'll take you over here to our blog at Sideways Markets, and you can watch the full-length version right along with me on the blog. Now, while you're here watching the full-length version, don't forget, if you're not a member here at School of Trade, you can grab a free pass, come out and join me in the trade room as a guest. Grab that free pass in the upper left-hand corner. I also want to remind you to register as a member of our newsletter. All I need is your name and your email address, and I'll send you an email every evening when our nightly newsletter is ready to be watched. Also, don't forget you can download all the charts you see me using in tonight's video. Follow that link below the video tonight on our blog and have those charts ready for your own trading time tomorrow. And as I always remind you guys, you'll learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. Grab your trial membership on the right-hand side. And please don't forget, I'm always here to help you guys out 24/7, 365 if you have any questions for me. Hope you guys had a great weekend. Boy, oh boy, I had a great weekend. It feels good to be back, though, because we're coming off of Non-Farm Friday. Big moves last Friday. Boy, was that an incredible session that we had with all of our students. And, of course, we get another big week of opportunities coming right around the corner. Now, don't forget, Non-Farm Friday is a very important opportunity for the rest of this week, right? We see a lot of professionals now getting into long-term positions. And of course, today, we're expecting to see a lot more fireworks out of S&P, gold, and euro. We get a great run on crude. Lots of opportunities on crude, but very sluggish on the other. So I think this thing is coiling up and setting up for a very big week. I look forward to seeing you guys with us in our trade room tomorrow morning. Of course, don't forget our chat room is open all the time. We'll be in our chat room tomorrow for the London session. In the trade room for the U.S. session, I'll be back here tomorrow with your nightly newsletter tomorrow at 8 p.m. Eastern Time, like we always do. Before we get there, though, tonight we have big news coming from our good friends in China. We get the CPI. Big news coming out of China, always a market mover. Heads up on that if you trade in the overnight session. Tomorrow morning, though, coming out of London, we got nothing really major to worry about tomorrow coming out of the London session. Got a bunch of real small stuff there. You know, you might see a little bit of this move the needle coming out of Great Britain because of the post-Brexit stuff, but I don't see too much to worry about tomorrow morning in the early London session, right? So get to it here either tonight coming out of China, or tomorrow morning in the London session, pretty quiet there. And then we go into a relatively quiet morning here tomorrow morning in the U.S. session, 8:15 and 8:30. Housing starts in Canada, productivity and cost. That's pretty much all we have it. So really tomorrow we're expecting a lot more of the non-farm payroll reaction. And of course, we know this news will definitely move the needle here in the overnight session. So eyes continue to be focused on the non-farm payroll report. And of course, again, like I said earlier, without a lot of real dramatic reaction from 3 out of these 4 markets, we have to assume the anticipation is just building here as the week progresses. Let's start with crude. We'll go crude, then we'll go S&P. We'll wrap up with some gold and some euro this evening. Crude oil is bullish and trying to retest the measured move at 43.26 tomorrow. Bulls own the day today, but the bears clearly have short-term control at this time after holding a pullback during a correction off the highs, right? We're definitely in correction mode right now off those highs. Now, we assume the long-term bulls will be buying into this pullback all the way down to the low of the battle zone at 42.36. However, The short-term bulls need to stay patient to get back above the moving average and hold the pullback for the most reliable trade back to the highs tomorrow. Short-term sellers will be looking for the next opportunity to sell the next pullback to the moving average, but they don't have much room to the downside because we can see an unfilled reversal line waiting there patiently at 42.71. And that is where we expect to see the majority of buyers eager to get back into this market tomorrow with a target back up at that high. If you watched my newsletter last week, you saw a great example last week of how important those unfilled gaps are, those unfilled reversal lines. We've got one here at 42.71, just staring us right in the face. And as you can see right now, the bulls have control long term. Right, as I always say in the trade room, the bulls own the day, but right now the bears, they definitely own the hour, right? They get their new lower low. They held their pullback right now. What are the bulls looking for right now? What are the bulls looking for? Well, we got that resistance trend line coming down overhead. Now, the bulls obviously have a target right now. The buyers are trying to get back to that high. Right, that is the ultimate objective here for those buyers. Get back to that high at 43.39, and if they can really get a nice strike higher here, that 43.61 is a double up from this first move, right, going higher earlier in today's session. What we have to worry about first, though, if you're a bull right now is we can't just look for seller failure because the sellers have held the pullback. So what we need to do right now, ultimately what you need is you got to get this price back above, hold the pullback, and then go. That's where the most reliable opportunity is going to come for those bulls. If they fail, if the buyers fail on that pullback, we have to assume that sellers are going to keep trying to sell this thing down with a target, of course, down at that 42.71. Now, another opportunity here would be, and this is definitely going to be the more aggressive, would be a breakout pullback using that trend line, right? Using that trend line. Remember, though, the moving average really is going to be the most important clue right now to gain control for those buyers. Right now, the buyers own the day. In fact, the buyers own the last 2 days, but the bears have control right now. So if you're a bull, get back above that moving average, hold that pullback, and that will give the majority of the buyers a chance here right now to jump in again. Target back to the high, right? And of course, the double up at 43.61, and we'll see where we go from there. Now, as this price goes lower, the recipe for success pretty much stays the same. So if we do finish this move lower, which I would definitely anticipate, this is a lonely reversal line out here. It only got hit once. It's a lonely reversal line. So I would not be surprised at all if we see a trap high and back down, or it may just simply sell right off here. As we go low, remember, the buyers, you really got to wait patiently here. Seller failure is not going to be enough. You want to see this price get above that moving average, hold that pullback, and then you'll be able to go. In all reality, there'll be a few different opportunities here as we go lower. As it pulls back lower, seller failure will always be the first opportunity. But of course, that'll be the most aggressive because it is a short-term bear market at that point. You'll want to see that hold the pullback, right, to that moving average, right? So we can get that, again, buying seller failure, that will be the most aggressive, and then holding the pullback, that will be the more conservative. And then from there, obviously, going back up to that high. What if you're a seller right now? If you're a seller right now, you've got short-term control, which means if the buyers fail, right, buyers fail here, we go up, right, buyers fail, that's your cue there to keep selling it back down. As we go lower here, selling the pullback to the moving average, right, selling the buyer failure at the moving average, right? Again, short-term bear control means when the buyers fail, we have to sell it as long as we're not selling into these areas of support. Get to it quickly here, bears, because the 42.71, the 42.60, and what I think to really be the line in the sand here is that 42.36. I think until we can really get and stay below that 42.36, I think you've got to be worried the long-term buyers are going to be scooping this stuff up. Remember, we just got a beautiful trap low, right? Beautiful trap low. We have to assume that buyers will be entering into, again, long-term buyers, right? There's a big difference. Long-term buyers, they'll buy some here. They'll buy some more here, right? They'll buy some more here, right, they'll scale into this knowing that the odds are high, right, that they get back up to that high eventually. If you're a short-term buyer, though, you can't play that game because you're not able to keep adding to your position, right, as you go lower. So buyers in the short term wait to get back above that moving average to hold that pullback, and then you'll be at least get the most reliability here. Sellers, get to it quickly. Inside this area here, I've got to recommend against being a seller until we get back below and we can hold that break down. Now, as we go down, again, be prepared for everything right now. If we do get that breakout, the classic breakout pullback is never going to be the most reliable. What I always do is assume that there's going to be a lot of buyers here buying that 42.36 and play the game against them. It's what I call a breakout pullback, but it's a little bit different. It's a buyer failure at the low of that, right, of that trading range, if you will, at 42.36. I'm going to talk more about that as we go forward because we got a range on gold to work with. But basically, though, as we go lower, we assume buyers will enter. Don't just try to be the first one to sell that thing short here. Wait for the buyers to try to buy it again. You know where their stops are going to be, and that's where you should get the most reliable opportunity. We call it a second sell off the high in our trade room, right, in our advanced course. You could also call it, I call it a breakout pullback, but it's not your typical breakout pullback. It anticipates the fact that a typical breakout pullback will fail and go back into that range. And of course, we look for the opportunity here now for it to, right, to return back to its bearish trend at that time and move lower. We'll talk more about that tomorrow morning in our trade room. Of course, we'll get there live in real time with all of our students in the trade room. How about some S&P? S&P is bearish and trying to retest the measured move target up at 73.5 tomorrow. The bears have control, or should I say down at the 73.5 tomorrow. The bears have control in the short term, and we assume sellers will be entering this market until price can get and stay above the battle zone at 79.25. The undershoot of that channel low tells the sellers to wait for an overshoot, right, up to resistance at 77 even, and then look for buyer failures and pullbacks for a move back to retest the lows tomorrow. Buyers need to see price push through the overshoot resistance and then hold a pullback up to the battle zone target overhead. They have a very small window here in the short term for the buyers, but a much larger window if they can get and stay above that battle zone at 79.25 and then hold a pullback with a target up to 83 and new highs tomorrow. Now, first of all, I'm going to focus on today's price action because that's always the most reliable, but I can't help but notice that this is really, in all reality, just a nice deep pullback after last Friday's big non-farm payroll report sent that price higher. We talked about those lonely, untested areas on crude oil. Well, how about a very, very lonely untested area there at 72? We'll call that 72.75. And then, of course, the battle zone here at 71.75. So in all reality, again, we get a trade what we see, not what we think. But don't be surprised, though, if we get this price to finish, and really, in my opinion, it's either going to be one of two scenarios, maybe one of three scenarios. Either we get the buyers just to hold this pullback and we're gone, right? I mean, let's not forget that could easily happen. They hold the pullback, we go back to the battle zone at 78.25, and then it just blows right through it and goes right back up to new all-time highs, right? This definitely could be the scenario for tomorrow. That's definitely scenario one to be watching for. Scenario two, which of course is what we have to assume is more likely right now, just because it's all we know. We don't know anything more than the fact that we may have a long-term bullish trend, but right now the bears own the entire session today, right? And we have to respect that, right? We can't just say it can't keep going lower. It's a deep pullback. We have to trust. We have to give credit to where credit's due. And right now the bears own the day today. So we know right now that this market is more likely, at least what we know right now. We haven't seen a new higher high. We haven't seen a pullback hold. We have nothing to base, right, a move higher on right now, and that's the mark of a professional. We don't let yesterday's information cloud what could happen today. Take what's happening right now and use that. That's the only way you'll keep your sanity and keep the money in your account as a trader. So with that said, we get that undershoot into an